My name is Amanda Nelson, Director of Engagement, and welcome to our webinar today on how to find the right bank for your nonprofit. And I will start by introducing our presenter for today and our case studies. So today our presenter is Kate Barr, who is the co-founder of NFC and also former president of Propel. And we have two amazing case studies today. We have Nancy Fargo, who is Chief Financial Officer for Clove Alliance, and Trina Kennedy, who is Chief Financial Officer for Jewish Kids Group. And I'll introduce the moderators for today. So our moderators for our webinar today is Dana Brito and Wade Rogers, and they will be monitoring our chat today. So if you have any questions about the webinar at any point of the webinar, please feel free to enter those questions into the chat, and then we will answer those questions during the Q&A section. If there are questions that are posted by others and you feel like you are able to answer those questions, feel free to do so. If you have any information that you'd like to add in the chat, that is also welcomed. We see the chat as a place where people can be engaged and communicate with each other, but we also ask that people are respectful in the chat and that there are no sales or promotions going on in the chat during the webinar because it will be distracting. So now I am going to pass it over to Kate Barr.
Thank you, Amanda. Okay, I got to advance the slide. Okay. Thank you, Amanda, and welcome everyone for being here. I'm excited to talk, believe it or not, I'm excited to talk about banking services. And I'm really especially happy that Nancy and Trina are going to share their experience at their two nonprofits around banking services. And I joke a little bit about being excited about banking services. As Amanda said, I was the president and CEO of Propel Nonprofits for quite a few years. But before that, I was actually a senior vice president of a bank. So I am in favor of banks being great partners with nonprofits. And I know that that is not always the case. And that's part of what we're going to talk about here today. So I think it's interesting. The fact that you have all registered for this heartens me because it makes me think that the choice of bank and banking services does matter to you. That is one of those kind of choices at a nonprofit that is often kind of taken for granted. You have a bank, you have a checking account, you maybe have some other services, and there they are. So if you're the finance director or the executive director, you started, there was a bank, and that's who you continue to use. And I think what you will really hear here today is that it is really worthwhile to at least take a pause and think about if you have really the right bank relationship for you. I notice in the responses, most of you have not changed banks, and that is probably fine. But it's really worth kind of thinking about, are you getting what you need from a bank? And is that really the right setup for you? So when we talk about a positive banking relationship, and we will wind around these, there are really three aspects of it. One is the right bank, the right financial institution. The second is the right banking services that really serve your organization and what you need and kind of how you operate, which may be different than it was when you first started the bank relationship. And then the third is the relationship with bankers, the people who are there, who can really be responsive to help you solve problems. So we're going to continually kind of touch on these three aspects of your banking relationship. So we're going to hear from these two nonprofit examples right away at the beginning. And then we're going to talk about banking services. What are some frequently asked questions? And then what's some guidance for finding and choosing your bank? So, and this again may simply reinforce that you've got a great choice, and it may really spur you to think about looking for other options. So, but we want to start by learning a little bit more about your experience with banks. And so we're going to ask you 4 questions. We're going to start with these two. And I'm making this distinction between are you satisfied with the services that you have at the bank? And the second is, are you satisfied with the relationship you have at the bank? So take a minute and think about how satisfied are you with the services you have at the bank and the relationship you currently have with your bank. So I'm going to pause for you to answer that. Does the bank do what you need? And do you have people who you can work with? And Amanda, you can decide when we have enough responses to
We're a little
post.
over 50%, so we'll give them a little
Okay.
bit.
Okay, great. Yeah.
Okay.
And my guess is for many of you, it sometimes is the answer, but so choose the answer that you think is best for right now. Okay, so are you satisfied with banking services? Somewhat neutral, somewhat dissatisfied. That's 26% and 5%. So 30% not satisfied with the banking services. And the relationship, again, over 30% not satisfied with the banking relationship, and somewhat are, and then some of you are wild and crazy fans, which is wonderful. So let's go on to the second set of questions. This is really useful for us to think about. So the second is kind of out of this list or something else. What are the highest priorities for you in your banking services? And we invite you to choose either one or two. What are the highest priority when it comes to services? And then what kind of bank do you use? Is it a national bank, a regional bank, a community bank, online, credit union? Or you maybe don't know which kind of bank that is or which category it fits into. But I think this will be interesting too. So highest priority for your banking services and what kind of bank you work with. Again, I'll pause for a second. And we did leave an other in there because there are lots of priorities you might have.
Okay.
Okay. Relationship with the banker is very high on here. Low fees and clear fee structure, interest rates, line of credit, which we will talk about, and online, really good variety of priorities, which is what I would expect to see with a lot of nonprofits. A lot of national banks, regional, local, credit union, a whole variety, and none of them, there's no universal right choice for bank. And it's good to know that you have options and that there are some that as you're considering whether or not you have the right bank, that you know that you should consider all of these options. So thanks for answering those poll questions. I think it really informs us as we head into this conversation. So thanks, Amanda, for running that poll for us. So, well, I'm really excited to invite Trina and Nancy to join me now on screen so that we can really hear from them, because we're going to start by hearing about these two very different organizations and what is their relationship with their bank, and then something about the process that they took to get to where they're at with their bank. So I'm asking each of them one opening question just to get us set in the stage, and then I'm going to probe a little bit more. So I'm going to start with you, Trina. So describe your organization a little bit in its work so that we know kind of what you do. And then how would you describe your current bank relationship? So.
Okay, so I work for Jewish kids groups, and we're like a Hebrew after-school program that kind of started to create a making Hebrew learning exciting for children. So we coupled that with an after-school program and started maybe 12 years ago with just 6 children in a garage, and we have now grown into 250 students across the Atlanta area in 3 different locations. And then in 2023, we took that successful program and launched a national program where we're partnering with synagogues across the nation, and we're equipping them with curriculum and coaching and financial support to launch their own after-school programs. So that's kind of what we do in a nutshell. We've grown from $1 million organization to over $5 million organization in the 3.5 years that I've been working here. And when I started, we did not like our banking situation, and I made the bold move to switch banks And we now have an amazing relationship with a national bank and a great banking relationship with the banker.
Great, thanks. Nancy, I'm going to ask you to kind of tell us about your organization and how would you describe your banking relationship?
I'm Nancy Frazio, CFO of Clove Alliance, which is a nonprofit rape crisis center in Illinois, just south of Chicago. When I started here 12 years ago, we had like a $600,000 budget. Now we're a $1.8 million budget. And we've just really grown, and we have a really good banking relationship with our current regional bank. And most of that is probably because of we have grown, and we knew that we needed to expand from the banker that probably was on there because it was a member of the board probably worked at the bank, and that's how we had a bank, and we changed.
Great. Well, you both kind of touched on this next question, but I'm going to ask you to expand a little bit more on, what prompted you to really look at your banking service? Trina, you said kind of one of the first things you did was we got to change banks, but what prompted you to do it? And then what steps did you take to really go through that process? I know we're all interested in that. So again, I'm going to start with you, Trina.
Yeah, so I think when I first started, just the people that I came in and replaced were immediately telling me that they did not like the bank that we used. It was still a good, big bank. As soon as I started, I did not like their online services, their bill pay, all the things that make it so much easier when you're doing so much financial work. And there was no relationship. Like you could not, the banker at the bank changed all the time that was close by, but you had to have an appointment to get in there. It was just really kind of standoffish, right? Let's say. And so I started by kind of making a list. I worked with somebody sort of mentoring me through the process and, let's make a pros and cons. What are you looking for? And what would be helpful? So kind of the pros and cons, and then even doing that with different banks that we identified. I knew immediately I wanted a national bank, a bigger bank. Probably 3 years ago or so, there were some banks closing, and I was like, we need to be, I just felt like we would be in a better position, being in a bigger banking situation. So those were really important things, and we just kind of laid out a list of pros and cons and which banks, and kind of identified a national bank to go with.
Great, that's great. And then I'm just going to ask you one follow-up. Did you look at 18 different banks or 5 different banks, or how did you choose the banks to consider?
Just 2 or 3 ones that I was familiar with on a national level. I knew their names, kind of checked out their reputation, did a lot of Google searching on them and things like that, to kind of feel really comfortable that this was a good choice. And it was not hard for my CEO and COO to kind of buy into, hey, we trust you here. You make this move. Of course, it's a huge project to do.
Great. So Nancy, same question for you. What you mentioned a little bit about what prompted you to kind of consider change. You said it was somebody who the board knew, or so what prompted you to make a change, and how did you go about it?
Well, when I started, we had just one account at one bank. We had a certain amount of grant money, but the worst part is we had $50,000 in line of credit that was secured with money in a savings account, which kind of defeated the purpose. And as we were looking to grow and we saw the opportunities for grants throughout different agencies, we knew that cash flow was going to be the big concern. How do you get cash flow? You get a loan from the bank. So the small bank we were with, which was local hometown, you don't get a lot of love there. If they hold your savings collateral for a line of credit, there's not much going on there. Well, I had the luck of being in banking for 10 years. So I knew a lot of the local banks. And I said, okay, well, what are our goals? And we set our goals out. So I took that list of goals and our financials, and I went doing a little shopping. I started with another local bank, but I knew the commercial lender. And I said, okay, give me a hard why we would not get a loan, because I knew he was not going to give me a loan. And he goes, well, let me explain. So he did explain the things we needed to put into place and to have. And I said, okay. And then I said, I'm going to go up one, and literally around the corner, we have a bank that started out small and became a regional bank. And it not only was hungry for the business of a nonprofit because they needed it. I'd actually worked at that bank, so I knew they needed more nonprofit business, but they definitely offered a variety of products, a line of credit that didn't hold our savings account hostage, and that close banking relationship where we can talk to someone, ask a question, get an answer. Just it's just good to know it's there. And we do a lot of cash fundraising. So it's nice when I have a big bundle of cash, to just go to the bank and not have to drive all the way across town.
So you go to the bank branch often enough for that to be an important consideration for you, Nancy?
Really, we only do it 2 or 3 times a year.
Okay.
But I do get a few checks here and there that I could very conveniently put through a Micker reader and everything. But honestly, it's so close, there's no point in dealing with that. So yeah, we do go to the bank pretty often.
Good, good. And Trina, you mentioned wanting a national bank because you thought that it would probably be more, you'd be able to count on them still being around. But then as you expanded nationally, how important has that national bank been for you?
Yeah, I think it's really good. We have expanded nationally. We just started that when I opened it up with a national bank. I don't really use it that much nationally, but it's available, right? Like I know that it's there. I know that, I can handle something no matter where I'm at. And I go to my branch also quite often just because I enjoy going to the bank and taking a break and walking over to the bank. There's one convenient to us. Being national, there's more of them around, I think. Sometimes those local branches, they're not in convenient places.
Yeah, good. Nancy, you mentioned that you knew that the bank needed your nonprofit business, and there's a question here in the chat, but it also reflects there's a lot of interest from nonprofits in making sure that their banking institution is aligned with their organizational values and mission, and is certainly not a bad actor in the community. So first of all, could you just talk a little bit more about what you mean by the bank needed nonprofit business? But for both of you, did you give any consideration to the reputation of the bank or their kind of practices around social responsibility or community involvement? So what did you mean by they needed our business?
Well, I knew, having worked there, I was the most recent purchase when they bought out our bank before they changed their name. I was able to look at all of their, because I did everything there at the bank. I did new accounts, I did loans, I did everything. So I got to look at their books, and I really studied as a bank where they were coming from and what they offered. And I saw that they had a tradition of doing a lot of loans. They were very, I'm going to say agrarian based is the best way to do it. They're definitely in the more rural areas, and they do have a very good lending capacity. But when it comes to things like nonprofits and that, they only had their toe in the water for a lot of smaller nonprofits. So I knew that someone that had the potential of being $1 million plus annual, we're almost 2 million now, that I knew they would be hungry for the business, that they'd appreciate the business, that we would be a good partner. And there's more than just having a local bank that'll give you $500 a year for an event. They actually do donate, and they do participate in our stuff, but it is really good to know that they were looking for us and we were looking for them, and it's the right fit for us, because we only had one national bank in town, and it really, that kind of relationship is just not there, and they're not in the community either.
How about you, Trina? Did you think at all about kind of the social responsibility or anything else about the bank?
I don't think that I really plugged into that as much, as I was so much more concerned about their online banking, their services, those kinds of things. I was really fortunate because as I called around and spoke to them in person at the bank, when I did go to switch the account, they brought in a banker that was a nonprofit banker. So specifically, and I don't know if all of them are this way or all areas, but I work with some, and my banker is strictly a nonprofit banker. So it's not a bank that, probably because it's national, big and nonprofit, and I didn't really go there thinking they would be that big and nonprofit, but they did have like expertise and have been great working with me, being that the person I'm working with is nonprofit specific.
Yeah, that's a great tip. And I think for everyone to be aware that banking nonprofit business, nonprofits are a business, right? And so for many banks, nonprofits are a desirable line of business, basically. And some of them have specialists who really focus on it. And it's at the national level, regional, community. Not every bank does, but if your bank does, then it gives you just kind of an easier access to that relationship development. So that's certainly something worth quite asking about. I also want to point out that one of the questions on that's coming up on the chat has to do with this social responsibility, is just that there is a regulation called the Community Reinvestment Act that banks are required to demonstrate that they are meeting the credit needs and the financial needs of their community, especially low-income communities. There's a lot more to it than that. But banks are rated, and their rating in their Community Reinvestment Act is public. So that is one thing you can check out about your bank to see, are they rating well? Do they have an outstanding rating or satisfactory, or are they not? So that is one of the ways that you can kind of consider that. So, yeah.
Yeah, because the CRA is how I knew they would be ecstatically happy to have someone that had a large account, because most of their nonprofits were tiny.
Yeah, good. So I'm going to ask each of you to just think about, if you could give advice to somebody, the people on this webinar who basically are in the position that you are maybe in originally, where you thought, I really think that we should reconsider this, what would be one or two pieces of advice that you would give to them about how to approach it?
You want to go first, Trina?
Oh, you go first. I'll jump in after you.
Definitely it's research, and it's not just what I need today. It's looking at the banks that are there, looking at what they have and saying, okay, are we going to grow? How do we want to grow? What do we expect to be in 5 years, 10 years? Let's not saddle ourselves with something that's not going to serve our needs in 6 years. Let's build that relationship and continue to have that relationship. So yeah, you make a shopping list, and you have to realize, okay, this is a no-go. If you don't offer this, or you're not willing to work with us on that, we need to go look to another bank. And it's a process, but it's much better, in my opinion, to have a desirable long-term relationship with one bank serving your needs than to go hip hop, just because another board member works at this bank and not that bank. So.
Yeah. And I would probably say, look long-term, like, maybe the bank's serving you right now, but you have to look ahead. And for me, it was looking ahead, and it's a huge process. It's kind of a scary process to change banks, whether you've done it personally or you're trying to do it with a business, especially a nonprofit. I find that so much stuff is tied to your bank account. You got to start all over with your bill pays and all this. It's overwhelming, and you just kind of have to go really focus on long-term what you're going to get from it, and be willing to make that commitment to do that, because it's a huge task to change. But in the end, if you do the work ahead, like Nancy's saying, I think it's an amazing, you can put yourself in such a great place to do that, and do it ahead before you have to do it, or before you're like that bank is just no longer serving you and you're forced to quickly do something.
That is great advice. And I really appreciate, Trina, you talking about how acknowledging it is a lot, especially with, this isn't just moving your checking account. This is ACH, online banking, your payroll setup, your bill pay, all of that. So it's a significant undertaking, and not having to be forced to do it quickly, but to have time to do it where you can kind of make it into a project that you can do, because it is a big undertaking. And I will also acknowledge that changing banks when you have a credit line, is a different process than if you are really primarily a depositor. And so they're both possible, but you have to really think about which one is going to lead the way. Yep, great. Well, I'm really pleased that both of you have great bank relationships, because that is, I think, what everyone on this webinar wants to have. So my last question is around the relationship, because you've both talked about having a relationship with people. And frankly, I think, Trina, some people will be surprised to hear that you actually have a good relationship with bankers at a large national bank, because I think there's an image that that's not possible.
Yeah.
So what do you think is, again, one piece of advice to have a good relationship with the bankers? Because the bank is one thing, the bankers, those are humans. What does it take to have a good relationship with the bankers?
I'm not sure. I don't know. I feel like I was really, really fortunate in getting, someone who understood nonprofit. And I think initially when we started building it, like I was asking about the line of credit and different things. And so he was really, really helpful. The big thing that I also got that I didn't know, and he really like stepped up to help me, was really securing our account. Like we're all very afraid, I think, of fraud these days. It just happens so much. And so he kind of helped me lock everything down, right? Like nobody can pick up a check from my account. It has to all be entered in and set up before a check can be cashed. Even if I hand someone a check, it has to be in my system. Every time something happens, if there's a big transaction, I get a phone call from their like service people or whoever, whatever department does that. And I've had calls from my banker specifically saying, hey, did they call you? And I'm just double checking you did so I don't know. I frequently talk to him. I touch bases with him. And sometimes email him. And when I told him, I called him up personally to tell him I was going to come and share my banking experience. And I said, I just want you to know I really appreciate our relationship and how great you've been to us. So, sometimes I just think, maybe it's just clicking with the right personality, but it's keeping in touch with them, I think, a little bit.
That's great. Nancy, how about you?
Yeah, I think that's definitely been, we don't have a nonprofit person, but we do have a personal banker. And they are our touch point. So when we say we need to increase our line of credit, well, this is the officer that's going to be in charge of that, which happens to be the same guy now for a couple of times around. But it is good to be able to have that relationship that when you're saying, okay, I've got a question about X, that they can go through and bring that back to you and get you an answer. And it's also great. I mean, like you're talking about security, we have ACH limits. And sometimes when it's the end of the month and I have to pay our legal services and I have to do all that, it will go over the limit. So I can literally make one phone call and say, can you raise my limit for today? It's going to be X, and they'll do it. And it's really nice to have that blend of we're big enough to handle the ACHs and the payment accounts in your line of credit and doing all these things when you need them, but you still can call and get someone.
That's great. That's great. Well, thank you both so much for sharing your experience. And I will tell you, there's a bevy of questions for you in the chat. So after I go back on screen, if you want to look, you can go and answer some of those. But this has been great. I know that everyone really wants to have that great relationship that you have. So thank you both so much. So we're going to talk now a little bit more about banking services and just kind of the process for how do you actually choose your bank. So I'm going to move on and talk about banking services because, both of our panel members talked a little bit about what they do with their bank. And this is one of the first places for you to really think about, do you have the right bank relationship? Is just think about, are the things that you do at your organization now being really served by the services you have with the bank? Or are they throwbacks to a previous time where you were smaller or didn't have as much online transactions or anything? And I would say that every single thing that you do with your bank should meet at least one of these 4 goals. It should either make your workflow easier. It should help you keep your money safe. It should help you manage your cash flow, or it could help you generate income from cash balances that you have. The number one thing that your bank services should not do is make your life harder. So I think that in a way, both of our panelists were experiencing where their work was actually harder because of their banking services. And this may be the matter of you have the right bank, but not the right services. And it could be really needing to consider the whole setup. But of course, there's no one size fits all. Small organizations sometimes have complex banking needs. Large organizations sometimes have simple banking needs. So this has a lot to do with what kind of work you do. Do you operate nationally? What kind of payments do you make? What kind of deposits do you get? What kind of risks do you have? Do you have anything internationally? So you really have to kind of paint a picture of your organization financially and think about what it is that you do. So let's start I'm going to very quickly go through this little bit of a laundry list of banking services. So services that make your workflow easier, and I think we heard about this and saw this in the poll, is things that kind of automate things. ACH payments for either making payments, for bill pay, ACH for receiving donations, recurring donations, or any other kind of payment. Remote deposit, where if you do receive check deposits, banks are able to do what's called remote capture, where you don't have to go to the bank branch, but you can scan them into a little machine and get them into the bank. If you have very large volume checks, this is kind of especially for large scale bill payments or large scale donations, can use a lockbox service where you mail it to your donors mail it to a PO box and the bank processes them. The ability to do wire transfers, debit and credit cards, online banking, all of this convenience that we know that is really vital so that you, as the finance leader of an organization, can really think strategically or about your accuracy of your finances and not about getting the money in and out of the bank. So all of these things that make your workflow easier. So if there's any of these that you not currently have or your bank doesn't currently offer and you think would be helpful, that's one thing to think about. The second category is services that help keep your money safe. Trina talked about this in particular. So things where, because there is so much fraud, and there's a lot of fraud with financial transactions, of course, because that's where the money is what's called positive pay service, which was what Trina was describing, where you upload your check register and then it gets matched against the checks as they clear, so that the bank would flag and stop any payment that they didn't know you were issued. Kind of a similar thing on ACH called ACH filter. Different authority levels. Nancy talked about that, where you can have online banking and you may have ACH services where the CFO has a high level of authority, or the CEO does, but someone who's more in the accounting department or controller may have a lower level, so that you can, or double, where double approvals are required. Multi-factor authentication, so that you have to enter a code or have a fob or have something on your phone for additional security. Monitoring services and alerts. Again, Trina mentioned the idea that the bank has got banks that have good fraud protection services and monitoring may flag something and call you or contact you. And then the last two are less about protecting your banking from fraud against your account, but rather making sure that your money in the bank is safe. The one that we all take for granted is FDIC insurance, where the balances in an account at any one institution are insured by the FDIC up to $250,000. And then if you have more than that in the bank, one of the options for you is what's called an insured cash sweep account. There are other equivalents, but where you have one bank, but then the money gets spread out to multiple financial institutions, but you don't have to go open a whole bunch of different bank accounts. It's all done through a system that banks operate collectively, called insured cash sweep. If that FDIC insurance is a concern for you. So making sure it's safe from fraud and gets more protection. The third is services that help you manage your cash flow. One of them is different kinds of accounts where you minimize the amount of money that you have in your checking account that is generally not earning interest or not earning very much interest, and keep it in your invested account through what's called a zero balance account, where the bank that you just automatically pays out of your, making sure the transfers, or similarly is what's called a controlled disbursement account, or an operating line of credit, which of course Nancy talked about was very, very important for her organization, and I know is for many nonprofits, especially if you have government receivables, government contracts that pay in a reimbursement and it takes a while, or any kind of cyclical cash flow. And if you need an operating line of credit, this is definitely one of the first things you want to talk to a banker about, to make sure that they are actually interested, have an appetite for your business, and would be interested and willing to do it. Some banks are, some banks aren't. I will tell you that we did a whole webinar about credit and banks about 1.5 years ago that I'm sure will be posted in the materials you get as a follow-up to this. The third is in services, then the fourth is services that help you generate revenue. You have balances in your bank account. If you do have cash balances, Do they have high yield savings accounts? Do they have certificates of deposit? Or this kind of sweep account where you can balance and you say, we want to keep X dollars in our checking account and all the rest of it we want to earn income on in some kind of a higher yielding account. Some of that, again, could be that insured sweep account. And then many banks have an investment division that can also be doing different kinds of investments, commercial paper, treasury bills, things like that. Not every bank does. It's generally a separate section, a separate entity affiliated with the bank. So generating revenue from your account. So those are these 4 things. Your bank should be helping you do some or all of these things, and making sure that you are thinking about what have you used with your bank, what would really be helpful in the future if you're not currently getting everything you want from your bank. And the first thing I would do is I would go to your current bank and say, I would like to make my workflow easier. Do you have some of these services? Or I would like to be more alert to fraud. Do you have some of these services that could help us? And if you can't get satisfactory services that meet your needs, think about considering where might your options be. So that kind of leads me to one of the reasons that we decided to do this particular session is questions come up about banking all the time at the Financial Commons, in our different webinars, on our forum, and through some of our other conversations. So these are some of the kind of most frequently asked questions, and we thought we would just kind of snap through them quickly and talk about. First is, do nonprofits pay bank fees? I think that my guess is my 2 panelists would say yes, sometimes. Banking is a service, and there are banking fees. There are certainly banks that you may have in your community that do offer a no cost or very low cost checking account, for example, for nonprofits. And you should really look into that if that's applicable to you. And if the kind of transactions within that account are really appropriate for you, are really what you need. Otherwise, it is very common to pay for banking services. A lot of those transactional services, like the ones that make your workflow easier, are paid for not necessarily directly, but through what's called an earnings credit against your balance. And so one of the things that you should have a conversation with your banker about is to really help to do some analysis of what kind of balance would you need to have in your bank account to offset those service charges. And is that a choice you want to make, or do you think you can earn more on the savings? It's just a financial decision, a financial transaction. So, is it okay to have banks at more than one accounts at more than one bank, and is it a good idea? Because a number of people ask this question. The organization I used to lead, Propel Nonprofits, had multiple bank accounts, and we had multiple bank relationships, both because it served our Propel is a community development financial institution that makes loans to banks, and there are loans to nonprofits, and it was worthwhile for us to have many relationships in the banking community. We also had fairly large balances, so we did a little bit of that risk management that way. But it's possible that you may have some needs where you really do need a local branch for enough activities to have an account at your local bank. And yet you need some other more sophisticated services, especially international services, that make it worthwhile for you to have a large national bank with international. But there's not necessarily a good practice of it, particularly if you're really able to satisfy the primary needs of your organization at a bank that you find that you can have a good relationship with. It's very similar to a question of, should you have more than one vendor in any given area where you really are reliant on their services? Sometimes it's good to have multiple vendors, sometimes it's not. So banks are kind of the same way. It's not necessarily a good practice, and many organizations are served well with one single bank. How important is it to have a branch nearby? My guess is the question is, how often do you go to the branch, and do you have to go to the branch? Because sometimes you may be in a location where you have very few options with a close branch. And it may be worth thinking about whether or not you really need to have a branch nearby. We talked about that FDIC insurance coverage, and then how you can prepare to request a line of credit. Again, I encourage you to watch that webinar that we did a while ago about banking, but also Nancy had a great suggestion, which is to say, here's all information, meet with a banker before you really need it and say, what do you think? What would we be eligible for? Would you be likely to approve it? And get some advice. So in terms of the choice of banks, again, as we saw when we asked where you banked, we saw a range, quite a few national banks, regional, community. Any one of these could be the right bank for you, and any one of these might be the wrong. I have seen great relationships with each type of these, including credit unions and online banks. I've seen bad relationships with all of them. So it's a matter of finding what's the best fit for you and knowing that particularly if there is a bank in your community that has a great reputation in the community for responsiveness, that's certainly a place to really think about how to do it. Sometimes you may outgrow your bank. You may have a bank that has limited services and you really need to have more sophisticated services. But I will tell you that with technology, many community banks have a full range of all of these banking services if you talk to the banker and find the right services for you. So it's not necessarily that national banks have more to offer than community banks. It's really a matter of finding the right bank that offers what you really need. And so how do you go about finding it? I think that the advice we heard from our two panelists really kind of described it. And it is these three components. What are the banking services you need? And you really have to think about what you do, how you do it, what's changed, what's not working. Think about what has been burdensome over the last year that you want to think about. Look around at different options for financial institutions. Again, ask for referrals, ask people who know. It's not just a matter of I have a brother-in-law who works at that bank, so it must be a good bank. But like ask other nonprofits, ask small businesses who often also have experiences. If the social responsibility and community reputation are important to you, check into that too and ask about banks in terms of their support for community, their involvement, serving on boards, serving on committees, and how they do that. You may also need a financial institution for specialized services. I mentioned international services. If you are an organization that operates where you have financial transactions internationally, particularly in addition to European countries or Canada, it may be that you need to really make that a priority for your banking because it really does change what you need from the bank. And then finding that relationship with the banker, you got to find people to talk to. Call, walk into a branch, ask around, meet a banker at a gala and say, can I talk to you? Finding out if they have a nonprofit specialist or division is also a good tip because that group of people is more likely to be aware of how to work with nonprofits, really be interested in nonprofits. But no matter where you are in a bank, remember also that things change. Things change for your organization. You may grow, you may expand, you may change the way you deliver your services so that your banking situation isn't working, but also banks change. I'm in Minneapolis, St. Paul. We've had a number of bank acquisitions recently where a larger bank comes into the market and purchase is more of a community bank. That relationship changes. It doesn't necessarily mean it's not the right relationship, but you really need to pay attention and find out how it will change your relationship. So think about all those sorts of questions. So I know that there are lots of questions in the chat. I'm going to turn it over to Wade and Dana to really talk about those.
Great. Thank you, Kate. We might bring in Nancy and Trina as well, because I think some might be headed their way in terms of the questions. There have been several, this discussion has also come around, the notion, I remember when I started a job as a finance director, I think we had 7 different banking relationships around town, because that's just what we do as nonprofits, I believe. Kate, you've touched on the wisdom of that, but I think there's also something we think about is the fact that these are also potential donors. And often we maintain these deposit relationships for that very reason. And Emily has asked the question as well about, is that something that might be part of the conversation with a banker in terms of their potential as being a supporter of the organization financially, in addition to the banking relationship. And for Nancy and Trina, if that's something you've encountered in your discussions.
It's definitely something that we've come up upon, but we don't necessarily make it sound like it's a make or break of the deal. But we do recognize where they've helped other people in the community. And then we'll say like, oh, you know, I'm so glad we've got this relationship with you and you helped X. And we're hoping for your support on that. We'll let you know more details when it comes around, that sort of thing, but kind of leave it really open-ended because we found that asking straight out for sponsorship, you actually end up getting more participation in some of the events we have, and they'll spend more with that than they ever would a sponsorship.
Yeah. You.
Yeah, that wasn't a thing that I was looking for primarily, so I don't think that I focused on that really. It's a good ask now, though.
Well, and it's for us, it's a good thing because what community agency doesn't want to know they support services against sexual assault, especially now. That's a big buzzword for a lot of businesses. So it's definitely had a few more people come aboard.
And I think that ties into the discussion as well, because a lot of questions in the registration questions as well as the chat, which you all have addressed, but that idea of also looking for a banking relationship that aligns with your values and ESG considerations, and those types of questions, which you all did address earlier on, but that becomes important as well, for sure. I've several questions, you know, and Kate, you popped it up there on one of your slides about banking alternatives and looking at credit unions versus smaller local or regional banks and national banks. Any comment you might make on the credit union question, if that's something that, you know, some folks might want to consider more than a traditional bank?
Yeah, I can respond on credit unions, but I'm also going to add in online banks to this because I think that the key is making sure that just you're with an insured financial institution, an insured regulated financial institution, which credit unions are, but also many online banks are, but not all online financial vendors are. So making sure you're with a regulated, insured financial institution. And then it's the same set of questions. Credit unions, for many nonprofits, really speak to that question about alignment with values and with community commitment. And so and there are many kind of, especially kind of larger credit unions that really have many, if not all of the same services in their kind of business areas as a commercial bank, and may be exactly what you need for your organization and may in fact really satisfy that values alignment and community alignment for you. So I think it's definitely worth considering.
Very good point, thanks. This came up as well, and some folks in the chat were really helpful about this, but Nancy and Trina, in your transitions between banks, if you have any commentary on the overlap period, right? It's not like you're just going to turn off the relationship and start the new one on the next day, and how you might have managed that in terms of transitioning and the time involved.
My initial plan was to keep the other one open for a year, and it's been well over 2 years and it's still open, you know. Sometimes just as, a little hanging on to that relationship, there's no need, you know, there's not a huge amount of money in there, but every once in a while, I'm surprised by, some donation or something comes into that account that I didn't know was still attached to it, you know, and so I have to go back. And that's the biggest reason I think to keep it open or plan to keep it open for a little bit longer, because you got to transition everything out and you can't even really understand what all might be attached to it.
I agree. That's the same thing happened to me. I thought, 6-7 months, I'll be done with that account. But then every so often some deposit or something, you go in and it's like, I didn't even know what went there. So then you got to do damage control. It's like, okay, let's change to the new one. So mine was probably kept open almost a little over a year probably. But by then I figured all those had hit.
Yeah, makes sense.
We actually got a question for Nancy, and Nancy, I think there's a lot of appreciation for your comments around recognizing that nonprofits are a business that come with, needs tied to your business. And I think we got it when you were talking, you talked a little bit about it in the conversation with Kate, but was hoping you could revisit and maybe elaborate on what was on your shopping list in looking for banks, and particularly for those who are not finance professionals, what were you looking for and why, and looking at and I guess interviewing options for financial institutions?
Well, first off, we wanted, of course, FDIC insurance and the fact that they had a variety of products that would meet our needs. So not only could we have checking, could we have multiple checkings? Could we have one that's set up for this and one that's set up for that? Can we have a way to pay our bills? Can we have a way to download information? Is it compatible with our software so we don't have to do that? And then piggybacking onto that, okay, is there an opportunity for a line of credit, and what would that look like and how would that be tied? Would I have the convenience of doing what I just did this morning and moving $50,000 over because we're floating too much money? Do we have the opportunity of maybe at that point, we weren't even there yet, but we're going, would we like to get credit cards for our directors to make that easier? What would that look like? They be secured? What could I do the limits? So you've got to think further ahead than you think. So, I mean, if you have strategic planning, I find that our strategic planning is very goal oriented to our services, which is fine. But you also need to look at your business and realize that you've got to diversify too, to a certain extent. Like I said, we've grown exponentially by looking at those opportunities and seeing what we need, because ultimately we have the ability to serve more people and provide more education and help with our overarching mission, because we have all the stuff at our disposal to let us grow into the bigger the agency that we wanted to.
Good. And I'm not sure, Wade, if you have any more questions, but I think there was one that came across and sort of stood out to me. I think there's some discussion in the chat around if your account needs to be a certain size to warrant more of a personal relationship with your bank. And so would be curious to hear if there's, your experiences with that, Trina and Nancy, or even Kate, and also if there's any tips or considerations around helping to build or ensure more of a personal relationship with your banker. Would love to hear experiences and tips along that vein.
Trina, did you want to go ahead?
Yeah, I mean, I can speak to it a little bit. I don't know if I have huge tips. I mean, I kind of sort of lucked into the relationship, but when I went in there to open the account, I was looking for a couple things on top of changing accounts. I was looking for the line of credit. So, that opened up a whole working relationship of going through that process. But then also, I was really looking for the credit card account you're talking about. Like we heavily use credit cards as a purchasing power. And so they were helping me with a commercial credit card, like I was explaining and, bringing them into some of my issues that I'm trying to solve, and how can they help me be part of solving that. I think working through some of that stuff with him is sort of what began to develop that really good relationship, is us working together to solve, different problems that I had. I think is kind of where mine probably led to. So
yeah. When we started out, we were small. We were really small. We were probably, like I said, we were maybe 800,000 or 900,000. It was, I mean, in the greater scheme of things, not a huge account compared to some of the other businesses. But it was a matter of walking in and letting them know, okay, this is what we need, and this is what you can expect, and this is why we want to grow, and we'd like you to help us grow. And I think by inviting that, you do get a little more buy-in. And there's nothing wrong with going to business after hours and, handing out your card to people and doing a little homework that way. That's part of the reconnaissance before you even go to that first bank. If you have the opportunity to meet other bankers in the area, you can learn very quickly, and you get a good feel for the bank by the people that go out to those things.
I think there's a question I thought was really interesting. Once you have this relationship, I think a lot of us think it's just now we're up to that banker and the relationship you have. But how, on an ongoing basis, can we make sure that we're maintaining the most competitive relationship? How do we keep our banker kind of on guard for, making sure that they're finding us the best rates or the best services out there? Do you kind of keep an ongoing dialogue there to kind of question products and rates?
Definitely for us, that has been an ongoing concern because we had a PPP loan that we had to pay back because it was grant funded and there was no other way. So that was like a nice extra line of credit we had for a few years. And now we're going, okay, we need to increase our actual line of credit against the building. And we were not really happy with some of the first numbers our bank came back with. So we went shopping. There was a little bank down the road. They were hungry for the business and mentioned it. Now, in all likelihood, because we just finished paying off our mortgage and PPP, we weren't going to get a ton, but our bank did come back with a little bit more and explained that in a year we could do X and this would be an availability to you if you're willing to, do the fees and do it again in a year. So it's definitely to let them know that this is a relationship and we want to keep you, but at the same time, we're growing and don't hold us back.
I see that by the clock, it's time to wrap things up with Amanda, I believe. Thank you so much for all the chat. It's still going, so certainly appreciate that. And I will pass it off to Amanda.
Thank you, Wade, and thank you to our presenters, Nancy and Trina, for sharing your stories today. And thank you, Kate, for presenting this amazing information to us today.